So in terms of the yield forecasts of Metrobank, we do, as I said, see the yields across all tenor buckets, both short and long end yields to rise. Now the dark line there is the end where yields were at the end of last year. And the blue line is where we are currently. So it's actually risen by quite a bit already. And many factors there that includes the likely rate hike increase by the BSP or lift off in the second half, which we now think is actually going to happen in June, which is late first half. And also more borrowing by the government because the government is still in deficit spending mode. Deficit spending equals support growth. But we do see, so we care about where yields will go because as yields go up, prices of bonds fall. The value of the bond portfolio does fall if rates continue going up. But we do see kind of some peaks in yields through the year, perhaps because of inflation peaking later than initially expected. We'd want to be catching peaks in yields when inflation is showing signs of rolling over, of peaking. But we would look at bonds this year and be opportunistic on bonds as yields look to peak and really in turn because of inflation potentially peaking this year. Next slide, please. On dollar peso, again, our forecast is 53.40 by year end this year and exceeding 54 next year. A lot of it is really because of the sensitivity of our current account balance to oil prices. Our sensitivity work suggests that if oil stays above or within the 120 to 140 range, we're about $100 right now. The peso is susceptible to weakening to 55 pesos. Right now, it's at 52.50. And again, our year-end forecast is 53.40. Next slide, please. There is also the pressure from rising US rates. If we're later, as I said, if the BSP is going to increase rates at a later stage, which is already the case, and at a slower pace than the US Fed, that does apply pressure, upward pressure on the peso and a stronger dollar against the peso, as we've seen historically when the Federal Reserve, the US Central Bank, starts hiking rates.